Peter Eliades with you, Stock Market Cycles Update. This is for the week ending Friday, September 27. We're going to get into it today. There are a lot of things to talk about. We're going to go into the technicals, the price projections, the whole thing. Before we start, we noticed that there are some comments on the page. We encourage you to write comments. Give us your feedback. Let us know how you feel about what we're doing, good, bad, whatever. We will attempt to answer any comments that are made, but we encourage you to comment on the updates that you've seen so far. Please do that. And if you enjoy them, especially if you enjoy them, let your friends know. Get the word around. And we're going to continue to do what we're doing. We've only been doing it for about 40 or 50 years now. So we've been fascinated by markets since we first started looking at a chart. I can't tell you how many years ago. The reason I have this chart on in the background is this is one of the more fascinating trend lines I have seen in long history of doing market analysis. This is the New York Stock Exchange. And this line, we actually started the line with an intraday chart. So if we go to style up here and go to an open high-low chart, this is how we initially put this chart together. The chart is anchored on the August 18th of 2017 low and the June 28th of 2018 lows. You can probably see the two little squares here. There's one of them right here. The other one is right here. So if you draw a bottoms line between those two bottoms, look at what you see after that and what you see before that is truly remarkable. Talk about a trend. Okay, so let's go all the way back if you want to see. We're talking about 10 years here. You go back to 2009. Here's the 2009 bottom. Now, as you see, that for about a week or two went below that trend line, but that was it. Once it went above it, it maintained that trend above it, coming into a test of it in late 2011, again 2011, mid-2012. All those lines held. We like better looking at once you draw the trend line with the lows, we like looking at the closing prices. You don't get more than a few days below this line if the market's going to maintain its strength, as it well did, as you can see, through this whole time period. So let's move forward on it and see what happened. Okay, so finally, in late 2015, early 2016, we got a break. And that break was a relatively important one. We got a significant decline here coming into the low in early 2016, around February, I think, of 2016. Then we had a rally up to the line, got stopped. Another rally up to the line, got stopped. Another rally up to the line. Looked like we might start a larger decline here. Didn't do it. Got back to the line, struggled with it for several weeks, a month or two. Finally got back above the line. This was in February of 2017. Now that line became support rather than resistance. Came down to it. April of 2017. Came down to it again. May of 2017. Came down to it one final time in August of 2017. And then what happened? The final blow off to the upside. Now remember, this is the New York Composite Index. And this is the high registered in January 18. Not too many people know this, but we've never gone above that high. One could claim that indeed this blow-off move to the upside was the end of the bull market. We don't know that for sure yet because we could go to a higher high, but look what happened after that. We came down to the line, stopped exactly at it. This was March of 18. Came down the line again a few weeks later. April of 18. Came down to the line again, June of 18. That's what became support, held that line and held that line. And finally, after the secondary high on the New York Composite Index in September of 2018, and for many of the indexes, this was not a secondary high. There were new all-time highs, but not on the New York, which is all the stocks in the New York Stock Exchange. So We got this break finally in mid-October, and now every move has been back to that line, which has become supreme resistance once again. How many times did we do it? November of 18, try to get up there late November of 18, got up there at the rally April 30th of 2019, came back down again, got up there once again in July of 2019. A remarkable trend line. And now this gets interesting. Are we going to get up there? If we do, will it be one final time? Because if we get up there one final time, right around here, look to the left of this cursor and see where we are. We're back around the 2018 high in January. So a move up there would bring us up here. Will that be the final move of this great bull market? We don't know, but we wanted to point out this line to you because we believe it has been remarkable. Okay, what else did we want to look at? The advanced decline line, the daily advanced decline line of the New York Stock Exchange. We showed you this channel when we first started doing these updates a couple of months ago. We showed you this channel. It starts at the October of 2011 bottom on the AD line, and you draw a line through the February of 2016 low on the AD line. Then you take a parallel and put it on the April of 2014 high. Excuse me, this is July of 2014 high. That's the parallel line from the October of 11 to the February of 16 lows. And look what happened after that. Came right up to it. January, February of 18. This was the all-time high in the New York Stock Exchange. Came down, sideways move, came up to it one more time. August of 2018, had a big decline into the December low, the Christmas low of last year. Then this huge rally, guess where it got up to? So we were doing updates around here, and we told you we had reached the top of this long-term channel in the AD line, going back for 7 or 8 years. And we bounced back off that again to the downside, and then a couple of weeks ago, in what may have been an important move, it broke above the upper part of that channel. Is that a breakout to the upside and the beginning of a rally that's going to be very strong? We don't know, but let me show you on a close-up basis what has happened now. This is really interesting. Look what has happened. Here's the break above the AD line channel. And typically, when you get that kind of break technically, you come back down to the channel, the top of the channel, and that's what happened today. This is today's line, just a smidgen beneath the upper channel. If that's going to be any kind of important sign of a breakout, even a temporary one, the market should stop right around this level. If we get back convincingly inside that upper channel line, we can label this as being a false breakout to the upside. So those are the two technical aspects we wanted to show you. And next, we're going to go into the price projections. Let's start out with this chart. This is a busy one, but a lot of you remember this from the past couple of days. We had a break below. We did a special update here a couple of days ago, break below there, and then we started rallying inside the offset lines. This morning, actually, we got a tiny break above, but immediately went back below the offset lines again, reestablishing this particular projection to the downside, calling for 29.52.62 to 29.58, let's say 75. And that happened in spades today. In fact, we went a little bit lower than that. The low for the day came down to a 29.47, I believe, or 46 and a quarter, actually. The period below that was the low for the day. So from that point, we immediately started a rally. Now, I don't want to do the very short-term thing, but just for fun, let's look at it and see what this tells us perhaps about Monday. If you start to look at these on a very short term, you can get into trouble. But the rally late today called for a move up to between 29.69, let's say 50, and 71 and a quarter, rounding them off to the nearest tick. So that's a rally into the late today, which may carry through into maybe Sunday's opening in Globex or Monday's actual daytime market trading. That's something we'll keep an eye on. Just for fun, take a quick look at the next longer one. Has not yet gotten above that offset. So, but this is the one that gave these spectacularly correct projections. Down here, bingo. Up here, bingo. Down there, bingo. Up here, bingo. Down here, bingo. And then with a longer offset, an even lower projection. So I hope you're starting to get a feel for the power and the dynamics of this projection technique. These were the very short-term projections. We wanted to follow up with you on this 27-minute chart projection and how that came about today. And now we're going to take a look at a couple of the dailies and maybe one or two of the weeklies too. Okay, without being overly repetitive, this is the 24.2 to 27.6 market day offset, the equivalent of a 5-week offset for a nominal 10-week projection. How has it been doing lately? Well, you tell me. This is the projection coming into the high that we reached in July of 2019, just a couple of months ago. Hit it virtually perfectly right in the center of the projection. So a decline from there. The low side of that projection to the downside was 28.1760. The low that we actually hit, well, we came down to that area a couple of times. 28.2571, 28.2212, 28.2551, and 28.35 approximately rounded off. So a beautiful projection here. Now, with this rally over the last couple of weeks, we have this upside projection, 30.9535 to 31.5607. This is a nominal 10-week projection. And there's only two alternatives when you get a projection. The projection is met or invalidated. How would it be invalidated? You've got to come down quite a bit from here. Get below both these offset lines, the lower one of which next week will be right around the 28.60, 70 level. So you could still have a fairly significant decline and not invalidate this upside projection. And as long as that remains in effect, that's what we're looking for in terms potentially a final high. Although remember, we have one other projection to the upside. We're not going to show that now. It's a little bit higher. But let's wait and see if we reach this one first. The only other one we'll look at in terms of a daily projection is the Dow Jones Industrial Average. And that upside projection, we've shown this to you recently too. Here's the Dow projection. Based on this low. And remember, when we click this to give us the projections, it shows you what low it's based on. It's based on the lowest low after the last crossing and the midpoint of the crossing, which took place between these two levels, the red line and the blue line. And I have not emphasized this enough, but when we use two offsets, any crossing in between those offsets is important too. So theoretically, what you do dynamically, and what this fabulous software written by Stephen Sherman has done, is it moves this line across here dynamically. You don't see it happening. And any point that is hit between the two offset lines, the highest point and the lowest point, are taken into consideration for this offset. On the Dow, 28,004.19. The high end is 28,596.33. Again, on the Dow, there are higher projections than that, but let's wait and see if this projection is met or invalidated. In order for the Dow to invalidate that projection, next week it would have to get down into this territory just below 26,000 and stay there for more than a day or two. That would perhaps accomplish an invalidation. I think that's enough for the weekend, enough for you to chew on. We've shown you the very short term, we've shown you the daily charts, and the numbers that are outstanding, and giving you general levels to be looking at for the possibility of invalidations of these upside projections. And perhaps most interestingly of all, we showed you the trend line on the New York Composite Index and the channels on the advanced decline line of the New York Stock Exchange. A lot of stuff to digest, but you've got the weekend to do it. Thanks a lot for watching. Please give us your comments. What do you like, what you don't like, what you'd like to see below, and we will try to answer all of them as best we can. Thanks a lot for watching. We'll talk to you on Monday.